Imagine opening your bank account and seeing $10,000 sitting in your savings. What would that change for you? Maybe your car breaks down and instead of panicking, you can pay for the repair. Maybe an unexpected bill arrives and you don't have to immediately reach for a credit card. Or maybe you simply want the peace of mind that comes from knowing you have money available when life doesn't go according to plan. For many people, saving their first $10,000 sounds impossible. But here's the good news. You don't need to become rich overnight. You don't need a perfect budget. And you don't need to save $10,000 tomorrow. You need a realistic plan and the discipline to follow it. In this video, we're going to break down a simple strategy to help you work toward your first $10,000. Let's begin. Your first $10,000 is about much more than having money in the bank. It's about creating financial breathing room. Life can be unpredictable. Your car might need an expensive repair. Your home could have an unexpected problem. You could receive a large bill you weren't expecting. Or your income could temporarily decrease. Without savings, these situations can quickly turn into debt. But having an emergency fund gives you another option. Instead of immediately borrowing money, you may be able to use your own savings. And there's another benefit. Saving $10,000 teaches you something extremely important. You can control your money instead of letting your money control you. That confidence can change the way you think about your financial future. Now, let's make $10,000 feel less intimidating. Don't look at the entire goal. Break it into smaller milestones. Start with $100, then $500, then $1,000, then $5,000, and finally $10,000. Let's look at some examples. If you want to save $10,000 in 12 months, you'd need to save about $834 per month. That may not be realistic for everyone. If you choose an 18-month goal, that's about $556 per month. And if you give yourself 24 months, it's about $417 per month. The point isn't to copy someone else's timeline. The point is to choose a timeline that makes sense for your income and expenses. A slower plan that you actually follow is better than an aggressive plan that you abandon after 2 months. Before you start cutting expenses, you need to know exactly where your money is going. For the next 30 days, track everything. Your rent, your groceries, your gas, your subscriptions, your restaurant spending, your online shopping, your entertainment, even those small purchases that seem too insignificant to matter. Then divide your spending into 3 categories: needs, wants, and financial goals. Needs are expenses you generally can't avoid. Wants are things you enjoy but could reduce if necessary. And financial goals are where you're intentionally sending money toward your future. The goal isn't to stop enjoying life. You don't need to eliminate every coffee, restaurant meal, or weekend activity. Instead, you need to understand your spending. Because when you know where your money is going, you can make better decisions about where it should go. Here's where many people make a mistake. They focus entirely on small expenses. They might spend hours trying to save a few dollars on coffee while ignoring hundreds of dollars going toward major monthly expenses. Instead, look at the big 3: housing, transportation, and food. These categories can have a major impact on your budget. Maybe you can choose a more affordable apartment when your lease ends. Maybe you can reduce unnecessary transportation costs. Maybe you can cook more meals at home instead of eating out several times a week. You can also review recurring expenses such as insurance, subscriptions, and debt payments. For example, saving $200 per month adds up to $2,400 a year. That's a serious step toward your $10,000 goal. So don't just search for tiny savings. Look for the big financial wins. Now let's talk about one of the simplest ways to make saving easier: automation. Instead of waiting until the end of the month to see how much money is left, set up an automatic transfer on payday. For example, you might automatically transfer $100 to $100 or another amount that fits your budget into savings. The exact amount isn't the most important part. Consistency is. Here's a simple mindset. Don't save what's left after spending. Save first, then spend what's left. Automation works because it removes the decision from your daily life. You don't have to wake up every morning and ask yourself, should I save money today? Your system is already doing it. And over time, those automatic transfers can turn into hundreds and then thousands of dollars. The best savings system is often the one you can follow without constantly thinking about it. Before you focus completely on $10,000, make your first major milestone $1,000. Why $1,000? Because it can give you a basic emergency cushion. Imagine your car suddenly needs a repair, or you have an unexpected household expense, or you receive a bill you weren't prepared for. Without savings, you may have to rely on credit cards or borrowing. With an emergency fund, you have another option. Keep your emergency savings in a safe and accessible place that's appropriate for your situation. And remember, this money isn't for a vacation. It isn't for shopping. It isn't for an impulse purchase. It's for genuine financial emergencies. Once you reach your first $1,000, celebrate the progress, but don't stop there. Your next target is $2,000, then $5,000, then $10,000. Saving money isn't only about cutting expenses. There's another side of the equation, income. You can only cut your expenses so far, but your earning potential can increase. Ask yourself, how can I earn an extra $100 this month? Then think bigger. How can I earn an extra $300? Maybe you can work overtime. Take freelance projects, tutor, sell things you no longer use. Take a weekend job. Start a side hustle. Or learn a valuable skill that could increase your income in the future. And here's the important part. Don't immediately spend every extra dollar you earn. If you make an extra $300, consider sending a significant portion toward your savings goal. More income combined with controlled spending can dramatically accelerate your progress. You don't need 10 different side hustles. Sometimes, one additional income source is enough to make a meaningful difference. Imagine you get a raise at work. Your income goes up. And suddenly, you start thinking, maybe I can afford a more expensive car. Maybe I need a bigger apartment. Maybe I can eat at restaurants more often. This is called lifestyle inflation, and it can quietly prevent you from getting ahead financially. Instead, when your income increases, try increasing your savings at the same time. You don't have to stop enjoying your life. You can spend some of the extra money, but don't allow your lifestyle to consume your entire raise. Think of it this way, when your income goes up, your future should get a raise too. If you earn more while keeping your expenses under control, the amount you can save can grow much faster. That is how you turn a higher income into real financial progress. Now it's time to turn this information into action. Set your own $10,000 deadline. Maybe it's 12 months, maybe 18, maybe 24. Choose a timeline that fits your situation. Then break your goal into milestones. $100, $500, $1,000, $2,500, $5,000, $7,500, and finally $10,000. Some months will be easy. Other months won't. Unexpected expenses will happen. You may miss your savings target. That's okay. One bad month doesn't mean you've failed. If you can't save $500, save $200. If you can't save $200, save $50. Just keep moving forward. Because your first $10,000 isn't only about the money. It's about building discipline. It's about creating better financial habits. And it's about proving to yourself that you can achieve a goal that once seemed impossible. So start today. Save your first $100. Track your spending. Automate your savings. Look for ways to increase your income. And protect your progress. If this video helped you, hit the like button, subscribe to the channel, and comment my first $10,000 below. And remember, you don't need to get rich overnight. You need a plan, consistency, and the discipline to keep going. Your first $10,000 starts with the very first dollar. Thanks for watching. I'll see you in the next video.